Thanks very much for joining us on Point. Asian markets traded mixed today. Market players are said to be decidedly concerned about rising coronavirus cases, especially in Europe. In Japan, the Nikkei share average ended the day nearly flat. That's up 0.09%. Hong Kong shares were on a downer. The Hang Seng Index ending the day down 0.4%, while mainland China fared better. The Shanghai Composite Index there closing up 0.61% higher on the day. The Nasdaq Composite Index closed above the 16,000 mark for the first time on Friday in its second straight record finish, while the Dow succumbed to its second successive weekly loss. Friday's fall was caused by banking, energy and airline stock slumping on fears of new lockdowns in Europe to curb a resurgence of COVID-19 cases. The S&P 500 lost 0.14%, while the Nasdaq Composite Index gained 0.4%. The Dow Jones Industrial Average falling by 0.75%. Let's take a look at the indicators. Well, to break down the markets for us, I'm joined by Tato Mashiko. He's a portfolio manager at Sanlam Private Wealth. Thank you very much for joining us, Tato. So there does seem to be quite a lot of anxiety around growing coronavirus cases, with lockdowns being enforced in some parts of Europe. This is, of course, no doubt going to be quite negative for sentiment going forward. How is it all playing out in the markets?
Good afternoon, Nambu. You're 100% correct in terms of the negative sentiment as far as coronavirus lockdowns being implemented in Europe goes. We've seen announcements from both Austria and Germany. Austria already going ahead with new lockdowns, and Germany announcing it as well, even indicating that people who are fully vaccinated will also be subject to lockdowns. And this, of course, is very negative, given that we have the busy Christmas season ahead from a retail spend perspective, as well as a general sentiment perspective. And we've seen the knock-on impact from the currency. We are now at around levels of 15.7 for rand to the dollar versus just over a week ago we were hovering around 15.1, and our currency being obviously one of the most liquid EM currencies, bearing the brunt of the risk-on, risk-off sentiment as a result.
So why is the local market seemingly swung into positive territory today? Of course, on Friday it did close in the red.
Well, yes, we did close down on Friday with some expected sell-off. Of course, we had the announcement of the 25 basis points rate hike. The tone from the announcement being somewhat dovish, and perhaps that concerned participants in terms of the extent of the rate hike cycle going forward relative to perhaps the Fed or the ECB, which seems to have taken a slightly more hawkish stance. And of course, that would be positive for the dollar or the euro, especially from a bond perspective. We have swung slightly positive this morning. One could argue that the market was slightly oversold at the end of last week, and it's no surprise that we've seen a slight reversal on that front.
Yeah. So Naspers, they came out with their half-year results. That's for the 6 months ended September this year, and they reported profit up 11%. I mean, what's your view on that particular performance based on what you've seen historically?
Well, the Naspers results are quite useful for assessing the non-10 cent part of the portfolio. Obviously, the 10 cent results are consolidated, quarter delayed. But what was quite positive from the results was the revenue at the top line grew somewhat faster than consensus, with group revenue over 30%, the e-commerce portfolio growing over 60%. And that that shows quite a rapid scale-up from that portfolio, excluding Tencent. Obviously, Naspers has been making significant investments of late in EdTech and food delivery. They did sell 2% of their stake in Tencent earlier in the year, and the proceeds there, over $14 billion, also have been reinvested in quite a number of investments in both food delivery and EdTech verticals in India, Brazil, and other areas as well. So from a Naspers perspective, it's quite positive to see strong revenue growth. Obviously, investments in associates, $5 billion in this half, was made. That obviously does temper the bottom line. So core HEPS only up around 4%, but classifieds as well. Profitability improved quite significantly, and that has always been a good source of cash flow from Naspers historically. But with the discount to NAV now approaching 40%, some would argue that it seems quite attractive at these levels, especially if we're going to see further growth from some of the newer investments they've made into companies like Bijou, BillDesk, and so on and so forth.
And very quickly, Tato, Netcare as well, the hospital group, they came out with results showing diluted headline earnings per share up 93%. We know that hospitals in general didn't do so well immediately after the coronavirus hit our shores, but that does seem to show that they're managing to handle the situation under the circumstances.
The Netcare results were encouraging. As you mentioned, HEPS were up quite significantly, doubling to 67 cents. They reinstated their dividend at around 34 cents, so about a 50% payout ratio. Group sales were up over 12%. EBIT was up significantly more than that, so quite positive from a margin perspective. And as you mentioned, coronavirus impacting the hospital groups quite significantly. So a lot of elective surgeries are being delayed because a lot of beds are being taken up by COVID patients. What's encouraging is that Netcare's share of COVID patients as a percentage of their total beds is down to 52% from around 80% at this point last year. So clearly more capacity being taken up by other procedures, which would be enhancing from a margin perspective. So far, they've spent quite significantly on COVID. So it's impacted them from an OPEX perspective, about $520 million this year spent with them in order to deal with COVID. And that obviously has a further impact on their profitability. So as we, I suppose, progress and hopefully have less severe waves, we'll see more capacity being directed towards other procedures, and that will be better for the hospital group's profitability.
Yeah, hopefully. Thank you very much, Tato, for your insights there. Tato Mashiko, he's a portfolio manager at Sanlam Private Wealth. After a quick break, Nzinga will have your Africa Trade Brief.